What's go What's going on, people? It's GBP baby. Welcome to another backtesting video. Today we're looking at macros and we're going to be using the Aussie dollar. My 1 minute data only goes back so far, so I am limited in the data I have access to. But yeah, we're just going to get straight into things. This is the week commencing Monday the 9th, Monday the 10th even. And yeah, I have all these macros marked out, and I'm going to start with this is the New York session, because I don't trade Monday London, so I'm going to go straight into New York, and I'm only going to be looking at trades that are offered within the actual macro times themselves. So yeah, should be good. I did actually record a video before this, but the actual video was very laggy, so it wasn't worth posting. So I have already looked at some macros in terms of backtesting on Aussie dollar. But yeah, so this is the 8.50 until 9.10 macro. And we're just going to find a setup. I can already see that there's a clear breaking market structure here, and then a pullback that would offer an entry. Or if you wanted to be, what's the word? If you wanted to be, aggressive, an aggressive entry here. So then again, this just trades the high of it, I think. High 66259, low 65. So that trades the low. This trades down to the high of this candle. So technically that's an entry, because this would be a breaker, low, high, low, low, then we break higher. And then you can be buying in this candle as well if you're expecting high prices. So I'm going to mark this out as an aggressive breaker. And we'll change the color of it too. And then you can also be buying in this candle, Y, low, high, low, low, and then we break and we close up here. So this is a good opportunity to be buying if you already have, as I said before, you need to have that bias and understanding where price is likely to draw to. But yeah, let me draw this breaking market structure here. And then you can see we pull back down into this fair value gap. That's another entry for long here. This one's probably more reasonable, because waiting for the fair value gap to actually appear is the safer option, rather than just entering on the whim, if you know what I mean, on the fly. So I'm going to do this candle here. As price trades into it, I'd want to be buying. And then I'd expect this buy side liquidity to get ran, and then running into these highs as well. So, but you can see we've traded all the way up into this buy side liquidity resting above here. So that's a nice target. But again, it's assuming bias. Like, you really have to have a narrative for why prices to draw to these levels, you know. But these are relative equal highs here, here, here. That makes relative equal highs. So there's a reason for price to want to trade into that. And I might as well send to that. Side liquidity, and then I'd with that in mind, I'd also let half of my position off at the 50% level. So I'd probably hold up to here, let off half my position there, and then let off my full position once we trade above this high here. In the range. Okay, so cool. And then we have another macro between when is this? This one's between 9.50 and 10.10. Make sure to write these down, guys. Or if you go to my Instagram, I'm going to be posting them on there as well, which is at its GBP baby. So you can see the macro carries on pushing forward, and then we break lower. In terms of entries in this circumstance, there's not really anything too nice. I mean, you could enter here, I guess. There's a fair value gap and a trade into this high. But the only thing about this is that you can see we have a breaking market structure here. So I guess you got a short entry there. A short trade, like a small position. Or a scalp, if you want to call it. Put that there. And I'll probably get out as soon as it trades above this swing high. And that means we're getting in and out within the frame of the macro. And also there's these relative equal highs. So you'd anticipate, once we consolidate here like this, and then we see that expansion, you'd anticipate these highs to be getting ran anyway, because there's relative equal highs from the London session. And again, this is all hindsight. So it's important to be realistic with yourself and to realize that it's not, once you're live and you're actually in the charts, you know, it's not necessarily this, you know, simple. So, but once you realize that, you can only practice, you know. So then we have the London close between 10 a.m. and 12. So from here, really, if we anticipate some kind of reversal or retracement, we can see a breaking market structure here. There is an entry for this reversal here. However, we're looking at macros only right now, so I'm not going to mark these out. I'm going to stay within the macro times, keep it short and sweet, purely because I just want to focus on macros for now. So we have another macro 10:50 until 10:50 until 11:50, 10:10, 10:50 until 11:10. Sorry. Do we see a setup here? Well, we have a breaking market structure here, bullish break here. And you can see we pull back. We've got a fair value gap here. We've got a fair value gap here. When you have two fair value gaps like this, you should anticipate the second one getting traded to, even if it doesn't. Which means my stop loss should be put at the bottom of here. We also have a breaker, low, high, lower, low, and then we break. So this candle here, these three consecutive candles here is actually a breaker. And you can see how we trade into that nicely. So I'm going to mark that out and call that breaker. And then the fair value gap as well, which is inside that box. Whoops. Which would be the ideal entry. So yes, you could buy here, and then you see we pull back, but this is where you got to really believe in really trust your bias, to be honest, and allow price to come down here, you know. Or if you wanted to, I guess you could sell this, but if we're bullish, we should be looking for buys only. So let's assume we bought. I'd let off some of my stops above this swing high for sure. And also let's look at how we took out buy side, sell side. So create this swing, took out this sell side, swing low here, took out this swing high here, took out this swing low here. So now we can expect these swing highs to be getting targeted. Relative equal lows, relative equal highs get created here. We push through that nicely, find support, and continue running on into this high. So this high, I'd definitely take some of my partial off. And also you got to remember that this range here, this big move down, this is acting as an order block. So you can see how we respect the 50% level of it. We dip just below it here, but we trade right back above it and find support on the 50% level of this range. So seeing that gives you confluence and reason to continue with your bullish bias and bullish stance, you know. So let's take off 50% here, and then again we can do the measured move where we measure 1 up as a target, and you can see our price trades that. Excuse me. There's another macro here between, what time is it? 10:50 until 12:10. So it's pretty much every hour that we see these macros forming, which is quite interesting. $11.50, sorry, until 11:10, 12:10. And you can see we pull back down into a fair value gap and a bullish order block, and then we turn around. So is this a buy? Again, if you're aiming for that, if you're aiming for the measured move, then yes. But you have to be, like I said, this takes skill, being able to have trust in your measured moves and to anticipate this to happen, you know. But then again, we created a swing low, took a sell side, so now we should be targeting buy side, and it's being able to recognize this as being a short-term low that's been taken. Let's call it STL, short-term low. You need to acknowledge that that's been taken, so we should be looking for buy side. And also we've traded into an imbalance. So let's say we add to our position here. This would be a beautiful trade. This is a crazy Monday though. And again, you double it up once again, and it should give you that -1 level which we trade through here. So we can let off some stops above here. Short-term high, STH, or buy side liquidity, whatever you want to call it. This isn't going very good. Let me put this buy side. I'll just leave it like that. Cool. So let's let off more of our. I'll probably let off. At this point, I'll probably let off most of my position, but I want to be as idealistic as possible because this is ideally what I'd want to be doing in these conditions. But being able to hold for this long, I'm not that skillful just yet. We're getting there though. And I'll make sure to have it on camera when I do, on record when I do even. So you can see we consolidate, and then we have an expansion and another offering for one more run higher. So you could trade this. This is another macro, by the way. This is the, what time is this? This is 1:10 until 1:40 macro. Where's the fair value got entry here? Excuse me. Gosh, me, I'm tired. FVG, and then we can buy that like so. And I'd let off all my positions above this swing high. And then you can see we consolidate. There is another macro here, but this isn't very probable. Look at it, it's just consolidated. So we'll go straight into the next day. And then the next day we're going to be looking at the London macro as well. So first thing to do, by the way, this dashed line is the Sunday opening. This red line is the Tuesday opening now, one Tuesday. And I'm going to mark out the high. This is what I do all the time. If you've been watching my backtesting videos, you know this is standard. Mark out the high and low of the Asian range. It really is about narrative, and I learned that as well today because I was trading Euro USD, the morning session, so the London session even, sorry. And you really have to know, you have to be like logical and look at the what highs have been taken out, what lows have been taken out, and because of that, what's expected. Like for example, here we trade above Monday opening, and we take out buy side liquidity resting up here. So buy side has now been tapped, so we should be looking for sells. So that buy side's been tapped, come down, we break lower, and then we can see as what do you call it? Oh, this is Tuesday the 11th. That is this week. I did not even realize this is this week's price. Okay, interesting. Wow, why not? So you can see we trade lower, back and forth. Lots of back and forth action. You see, this is why I don't really like the London macros. They don't seem to be very offering, so to speak. I guess here we have a breaking structure. Have we taken out south side? We haven't taken out south side just yet, but we can anticipate this high getting taken. But by the time we reach that, this high has already been taken. I'm not gonna put anything here. I don't see anything. That's very nice. Although this break lower and then the offering here is nice. Although it's outside of the macro, it's offered. I guess the move starts within the macro, so we could argue that that's an entry. So let's look at that as a nice sell in the fair value gap. So we have a break lower that wants to trade down this low, and we fail to take out this high, remember. So we have a failure swing here. That's right, failure swing. And we've closed below this low. We can anticipate price return back into that and offer us a short. And you can see we continue lower, and I'd then anticipate these lows getting ran, which they do. So I'd let off my full position probably there, and then 50% would get taken below this low, so on this candle, because you can see how we start to consolidate quite quickly as we start coming down here, you know. That's how it sounds. If the markets had a noise. If the markets had a noise, it would sound like this. Right, so we swing low, and then you can see we swing back higher. Could we get in on this move is the question. Well, yes. Why? We took out south side. We took out the Asian low. So let's mark that out. We took out Asian swing low. South side liquidity. Center it. Took out that south side liquidity, and being able to anticipate a break up like this is quite difficult, but you can see we took out this low here on this short-term low, so we have a quick one on stops, and we push higher past this swing high. This is very, very aggressive. This is very aggressive, but it is in the macro, so remember we're anticipating animation. So I guess and then if you look at the 50% level of this, we trade down to it, and this would be a breakup. Why? Low, high, lower low, or even this whole candle, low, high, lower low. So this whole area should be a buy, because once we take these lows out here, once we see a black candle form within this, we'll find support. We can use that as confluence to be buying within there. I know it seems very aggressive and almost unrealistic because it is literally the low, but this is technically a breaker. So if we wanted to hone in on it as well, we could easily just draw this out, and then that would be that exact area there would be the entry. So let me put a buy here on this candle, and then I'd anticipate these relative equal highs getting taken, which is exactly what happens. Now, Aussie dollar does have nice price action, so when we do start doing this kind of back testing with Euro and GBP, don't expect it to look so pretty, because they are messy pairs compared to Aussie. I'd say in terms of messiness, it would go GBP by far, then GBP, then Euro, and then Aussie, with GBP being the messiest. So what have we got here? Do we have a break in market structure? It's not a precise break. I think we have one. I think this break is more confirming. So we do break lower quite aggressively here, but you can see we trade back up and even take out this high here. So once we take out this low though, we could see that as a break in market structure, which could offer us another sell. So breaker structure, and I am going to be bringing this video to an end soon because we are coming up to the, we are going to be trading, I'm going to be trading live the New York macros, so that should be interesting. But yeah, we have a fair value gap here, we leave a gap as well, breakaway gap, beautiful to see. So there's a reason for price want to go lower. So I'm going to put a sell here, and you can see that I could definitely take off half my position here, and then I could leave a runner on down into, do we have lows resting? Yeah, we've got all these swing lows, so all of these would be targets. But it is interesting to see how these macros offer price, and how the movements are forming in there, like the setups are forming in there, you know. But I'm just I do wonder if I'm going to be able to, because like I said, when it comes to the London session, it doesn't seem as probable, but maybe that's just I guess it's a matter of practice. Practice makes perfect, guys. So I'd buy back my position here, and then also down. Let's draw out the low. Actually, let's be a bit realistic. Let's be more realistic. Like, we wouldn't just got a swing low here. We'd want to sell below that. Cool. Okay, and then the session between, I do this all the time. Session, there's a little range that gets created between the end of London and the start of New York, and you can see, look, we traced the 50% level. I've recognized this multiple times before. I need to start paying more attention, because it's interesting that we trade to the 50% level. Like, if we don't trade above it, we trade to the 50% level of it, of the range that is created in that time. So that is good for reference. You see we break lower. So this break lower hints to me lower prices already. But you can see we start again consolidations. This is the only thing I don't like about macros. Like, what are you what are you giving me? But I guess it's just animation. This isn't really. I mean, I think there's a fair value gap there. You could buy this into this high. So let's say that. Let's do that. If you're looking for a scalp, I guess macros are good for scalping, so to speak. But this is very choppy price action. I don't think I'd want to be trading in that anyway. But let's say we scalped. And I guess you could argue that's what I've been doing on the in the macros anyway, scalping, so to speak. Oop. Sell off here, simple scalp. Excuse me. I need some water. Somebody get me some water. Get him some milk. Right. So we have fair value gap here. Again, back and forth action. I don't like it. I can't lie. I don't like it. I mean, we took out south side here. Again, this is what you gotta do. Took out south side there. How long we've been recording? 24 minutes. So I'm gonna bring this to an end, and then I'll do a part 2. South side, run higher, pull back. So you could buy in this fair value gap up to here, but again, I'd want to see it trade into these highs, but it doesn't. A trade's a trade, I guess. I don't know, man. You use what it is. Put that there, and then we'll put that here above this buy side. And the thing is, when you're actually in the charts, these minute candles feel like hours. It feels like days. It's horrible, you know. But hey ho. Right, so let's look at this macro, 1050 to 1150. Anything of interest to us here? No, this is not nice. Anything of interest to us here? Yes. Why? We break higher, fair value gap, come down into that, and I have these highs in mind. Also, we've just taken out sell side liquidity here, 3 times even. Took out sell side here, then here. We just did it again here. So I'm anticipating some kind of buy side liquidity to get grabbed. So I'm just going to do that macro, and then the rest of the video you can watch in the next. I'll make it a 2-part series. I don't think I'm gonna keep doing macro videos though, because like you can see, they don't always offer the best opportunities, but I don't know. I've had good experiences though trading them, so we'll see. So we took out by sell side there, move higher, and then we got the new macro here, and there's an offer here. So cool. We have a breaking market structure here. Break of structure, BOS, and a fair value gap gets created, which we could enter in here. That could be a buy, and also rebel look. So it's be able to recognize these short-term lows. So this short-term low got taken. Short-term low on sell side liquidity, same thing basically, but short-term low. So now I'm anticipating I want to see this high get ran, and that's exactly what eventually happens. It takes a while to get there, a lot of consolidation, time distortion. So there's entry there, and there's also another entry if you want to add to your position here. I've actually done that once when I've added to my position. Pyramiding it's called. So you buy here, and then you hold, and then I'd sell up there. Where would I want to let off my partials? Probably around above these highs here, because we've got a swing high here, and we're traded into a rejection block, potential rejection block. All hindsight, guys, all hindsight. So does this offer us anywhere in this area? No. However, we do break down here, so pull back into this area does give us an offering. But again, it's a bit messy. And then here's another macro, which I don't really like this time. I don't think I'd be trading at this time regardless, to be honest. Realistically speaking, I think this is more suitable for, suitable for index futures and stuff like that. So you could do a measured move higher, and that measured move would line up nicely with that Sunday opening I have marked out. Not Sunday opening, sorry, the Tuesday opening. Yeah. And then here, just make that red. And yeah, cool. So I'm going to bring this video to an end, guys. Thanks for watching. Don't forget to join the Discord. Don't forget to like. Don't forget to comment. Don't forget to subscribe. And yeah, I hope you guys learned something. We're just looking at macros. And yeah, I'm going to make a part 2 of this because I do want to look at some more. But like I said, my data only allows me to go back so fast, so it's quite limiting in terms of what I can do. But yeah, hopefully we can. I really do want to develop my macro understanding, because as much as they're there, I don't fully understand them yet. But practice makes perfect, as I was saying. So yeah, thanks for watching. It's been everything, guys, and I'll catch you in the next one. Peace.